first question we always ask and lead with is like, what's your strategy? And I'd say 99% of people don't have a strategy. And that's the main concern because they're saying, I'm going out, I want to buy a property for $850K in Melbourne. I was like, but why? And so that's the kind of we're going to unpack at the start because you really need to do that first because depending on what your strategy is, it's really going to kind of impact on what property you buy, what structure you buy it in, whether you're like in terms of questions for your brokers, your accountants, everyone like that. You need to have that strategy in place. And so if you don't, you're kind of just investing for the sake of investing. You could probably still do well out of that, particularly if you're buying in the Melbourne market next year. But again, it's not what you want to be doing. So for us, the strategy is the first one. And so we'll use us as an example. For us, it's a self-managed super fund purchase. We're looking to make a purchase up to around that maybe 1.2 mark. So we're just looking for kind of a foundational asset. We're going to sit in there. It's going to do its thing over the next 10, 20 years. There are a few different schools of thought for super, myself included. Like I'm not opposed to selling that in say 5 or 10 years. If it doubles, we might sell that, take advantage of that 15% taxation in super and then roll it into a bigger, better asset potentially. But right now what we're thinking is 10-year time frame. It's called potentially up to 20 years. So we're just looking for a really good asset. So that's kind of what we're doing in a growth location where it's going to outperform the rest of Melbourne, but also other opportunities across the country. So that's, I guess, overall, I guess what we're trying to do. But then for us, in this instance, which differs to maybe a lot of clients who may be buying in personal name or trust, we're not desperate for like equity extraction. So we're not saying we need a property that in 12 months' time we're going to pull out $200K in equity, which we can do, and it is often what we're trying to do for clients. But we're not trying to do that in super. So that's not what we're looking to do. So for us, we don't have to be buying in the hottest markets right now, which we do for say Frankston, Carrum Downs, Frankston North. We don't necessarily have to buy there and get that kind of instant equity when we're buying kind of below market value, off market, all that type of stuff. For us, our time horizon is a lot further. So that's the kind of, I guess, in a nutshell, that kind of strategy, what we're looking to do. And again, everyone's brief is different, but for us, that's kind of what we're doing with this process right now.
I think for first-time investors, if you've never done this before, one way that you can sort of tease out what your goals are is by looking at the end of the whole process. So when do you want to retire? Do you have a particular age that you're looking to retire? It might be 50, might be 60, could be 65, whenever that is. And do you have a passive income goal? So by that, we mean how much income do you want to be receiving? And that's passive. So it's coming from the rent, coming from the properties and those sorts of things. So I think that's always a really good start point because then you can work backwards from that to figure out, maybe you've already got a few properties. How close are you to reaching that goal?
Yeah, exactly. Yeah. So you've got to have that conversation up front. For us, again, we've already spoken with brokers, accountants, financial planners, so we've kind of done all that heavy lifting. But if you haven't done that already, now would also be the time where you'd be speaking to your broker. So saying, these are my circumstances, how much can I borrow? And if it's, I guess, up to $900K, great, you know what your borrowing capacity is. Do you have the equity or cash to actually afford a deposit to buy that property? And then obviously, what is the intention with this property? Are you looking to sell it? 2 or 3 years, 10 years, all that kind of stuff. Are you planning to do a development or granny flat potential? That's where you got to have all these conversations now, not as kind of nice to haves or kind of thinking about 2-3 years after you've purchased the property.
But even things like a potential career change or parental leave, those sorts of things that might be on the horizon, if you are going to have to upgrade your principal place of residence, you can factor all those things into the strategy at certain times throughout your property investing journey.